Welcome to Stock Therapy with Penny Queen. Today I have Comstock CEO Corrado De Gasperis. Welcome back.
Thanks for having me. Always a pleasure.
All right. So I definitely want to talk about the marathon transaction. Big news.
Yeah, big news. I say monster news. It's a breakthrough in almost everything that we're trying to do. So that has multiple facets to it. Obviously, exciting about an investment with the set valuation. Excited about the facility that is being contributed as part of the second part of that investment. But not to dismiss at all, the offtake agreement and the desire, the the engagement for joint development, going forward. So, four major facets to it, all which impact us dramatically.
All right. Well, let's start with the facility first, because I,
Sure.
I think this is a really big piece. And from what I hear with other investors talking, I think they're missing some of the bigger picture on what a prize this is.
Yeah, it's remarkable. I think everybody knows that we have a base in Wisconsin, and in Wausau, Wisconsin, we have a quite important aspect of our system, right? We take in feedstocks, we test feedstocks, and we can process cellulosic sugars and we can make bioleum. But we're talking liters, right? Now we have a 2,000 gallon reactor and we do have scale there, but the operating system is really more designed to prove and test things than produce things. What Madison, Wisconsin does, and it's not right to compare the two because one feeds the other. And so but what is right is to say is that for a fraction of a fraction of a fraction of the value of these assets, right? If we were to replicate these assets, we wouldn't be able to afford it. We couldn't do it. Okay, number one. Number two, the speed at which we can now integrate and start producing not liters, not gallons, but barrels of fuel per day. Okay, is what we're most excited about because we 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 had at least three major planning meetings, right, to try to figure out how do we get Wausau to do, this, right? And we just couldn't fit. It couldn't work within the four walls of that facility, right? So we couldn't afford to really get to where we wanted to get to. We now have it. So in case it's unclear, we closed that transaction. We own those assets. I've already spent, and David and Chad and the team have spent weeks there. The top people, right, are excited about integrating their fuel facility into a bioleum to fuel facility. So to be clear, we have reactors, we have hydrocracking. I mean, we literally can produce the fuels. In fact, the company that formerly ran those assets produced enough SAF to fly an intercontinental flight, across the Atlantic. And I actually believe it was the first company to do that, to fully fuel a plane with enough SAF to get across across the Atlantic. So we couldn't be more thrilled about it. State-of-the-art facility. It's also, in an incredible location. The University of Wisconsin is right there. Their science engineering programs are incredible, so it's a perfectly located for us, so we're happy about that. The deal's closed. We own the assets as of today, and we'll be there Monday and we'll be there all of the following week. And we're running, we're going.
Okay. Well, let me ask a couple clarifying questions
Please.
because I know that there's accountants all over the place here. So when I see, it's at $13 million on the books, I
Mhm.
mean, I don't expect that you're going to be able to pull out a number for me, but it would cost you a lot more. It
Oh,
would
yeah,
take a lot more time.
yeah.
And I mean, do you have any ballpark or range on what the actual benefit to Comstock is?
Yeah, there's a double whammy benefit. In the first whammy is that we're getting 13 million. We're getting assets, in exchange for 13 million of our equity valued at $700 million. Okay. That's the first whammy. The second whammy is that the fair value of those assets, um, the replacement value of those assets, the time value of those assets, those are three different things, add them all up, right, are multiples and multiples of multiples, right, of $13 million, right? So that is just foundational. The fact that Marathon is saying that our technology, is a horse that they want to ride, and that our technology, potentially combined with the technology that's embedded in that facility, could be even a bigger horse to ride. The largest renewable refiner in the United States, we're honored. I mean, I don't know how else to say it, right? And we've earned it, right? We've earned it because, man, we've been engaged for 2 years. And it's not, and it's been productive the whole time, but that should speak volumes. It's they don't do things lightly, and they're a major operator. They don't even like to be distracted by, things that they would consider not practical, right? So it's a testament to get their attention. It's a testament to engage on such a professional level. And it's also a testament to now be moving so fast. So to give any color, I mean, both teams were thrilled, just thrilled, at the achievement, the accomplishment, all the hard work that went into it, and that something so positive actually came out.
Do you have any rough estimates of timeline to be able to incorporate your tech into the facility?
Yeah, I don't, yeah, we're playing, we've already, obviously, we did a lot of due diligence before the close. We did some, we did enough of the high level assessments, right? And the equipments and the processes are familiar to us, right? So we know we can integrate the two facilities. We know we can ultimately produce, hoping like up to 2 barrels a day, and that could be Bioleum oils, that could be SAF, that could be renewable diesel, and the versatility of being able to do all that, for customer samples, for ASTM approvals, which there's an implication there about what it means relative to Oklahoma, right? Oklahoma's, intended to be our first, call it TRL 7, commercial demonstration facility, right? Then you scale up from there. But Oklahoma was also going to be, needed to prove certain things out. Like, here's the fuels that we can produce there. Let's get ASTM approval, something, Marathon in the joint development is committing to do with us. Let's get pathway approvals, right? Something Marathon's committing to do with us. Well, what if we can do those right here in Madison, and potentially even get to TRL 7 in Madison? Okay, so to answer your question, can we get to TRL 7 in Madison? Can we produce up to 2 barrels a day in Madison? Can we get all that done, in this year? Like that's what we're trying to do. We have not finalized all the schedules and all the plans, but we've secured the assets and we've secured the main resources there. Now there's going to be some more neat resources needed, on both sides, because we've always planned to build this up. So, in that context, right, it won't speed up when Oklahoma comes online, but when it comes online, theoretically, you'll be sitting with saleable materials that are already approved, or have a tiny little short cycle, right, to validate the approvals that were already obtained. So it's a quickener in a big way, in a lot of different ways.
Okay. All right. Well, I definitely want to get into valuation with
Yeah,
you next.
yeah,
But
sure.
before that, I want to actually answer a shareholder question myself.
Please.
Because a lot of people have asked me, why the share price didn't go up yesterday.
Mhm.
And my answer is because you didn't buy more. Like that's was like bottom line. You read the news.
And we
If you
can't.
were not compelled by that news and you did not take the opportunity, then you're part of the reason that the price didn't go up.
Yeah.
Um,
Yeah.
that being said, this is a we're definitely in a place where price and price action are very disconnected to value.
Yeah.
So
Yeah.
here comes my next question for you. Let's talk about valuation. Let's talk about Marathon and the cap they put, why they would put a cap, and how that accelerates the Series A process.
Yeah. So 100%. The valuation, we were in and around a number 700 million, and we wanted to be committed and we wanted to be final, because if we waited until the Series A was completed, then we wouldn't have been able to take ownership of the assets, right? So we said let's just put a stake in the ground. And they said we're comfortable capping it at 700 million. And frankly, we think that number's low. I'm just going to tell you straight out, except the amount of work that Marathon's put into us, they deserve a discount. Okay. So everyone's looking at this as a cap. It's a nice stake in the ground for Marathon. That's how we view it. Okay. We don't think there's no such thing to us as a cap on our valuation, right? And so yeah, we'll be thrilled, to close the Series A out, but it's going to be done at the best, most proper value. And what a lot of activity is going on with a meaningful number of participants. So I was saying to someone else the other day, this is not the end of the transaction process. This is like, if you were running a thoroughbred horse race, this is like the gates opening to the race, right? Now the other horses are running, to get to the finish line, and we couldn't be more excited about that. So once that occurs, you'll have a final valuation number. More importantly, I think to some of the skeptics out there, you will have capital in the bank that's funding the next 2 to 3 years of fuel's accelerated development. No more slowness. Right now, we know what we need to do. We're going to get it done, which includes getting Oklahoma, online. It also includes, the continued commercialization of our business with international licensees, with pulp and paper mills, with sugarcane mills. You know, the notion of what Hexis means to corn ethanol facilities is mind-boggling. You know, if I was a corn ethanol operator right now and I understood the difference between xanografts and corn, and I understood the higher value, the significantly higher value that I would get per gallon of cellulosic ethanol versus corn ethanol. So now I'm saying, oh, you got a lower feedstock cost, you got a more malleable, flexible feedstock, you have a higher value. I mean, we're talking dollars per gallon of higher value for a molecularly identical product. And if that was it, if that was all, and they weren't converting or at least inquiring about converting, they'd be nuts. But that's not all, because what Xanograss has that corn doesn't, right, is rich woody-like lignin. So now, instead of just reducing your cost, instead of just increasing your revenue, you can double those yields or more by leveraging the lignin into the 140 gallon, system solution. So you're going to see a monster shakeup happening in in the corn, in the paper, in the sugarcane segments of the market. You're going to see a big shakeup, in our opinion. In addition to us delivering on our system, our network of facilities, which we're driving to, that 2035 goal. We're starting to speak the industry language a little bit more consistently, right? 200 million barrels of production is equivalent to over 8 billion gallons.
Yeah.
And while we're talking about corn and we're comparing and contrasting, the US mandate under the renewable fuel standard is 16 billion gallons per year of corn ethanol. The industry meets that easily, rapidly building 200 facilities to meet that, right? When their first facility got validated. The advanced biofuel industry is only at 4 billion, stuck at 4 billion. And the EPA is working vigorously to unblock that, recently allowing for biointermediates, recently allowing for cellulosic biointermediates, because they see that they're stuck because of feedstock. We now unblock that. And quite frankly, we feel like 8 billion gallons or 200 million barrels, same thing, right, is a pretty precedented, right? It's not unprecedented to build 60 facilities in that period of time when the ethanol industry built very similar facilities, 3 times that number in a shorter period of time. This is what we're talking about. But remember, 60 facilities, 8 billion gallons, 200 million barrels, however you want to say it, is just our owned and operated network, right? We're talking about converting a portion of the corn industry. We're talking about converting pulp and paper or integrating pulp and paper, integrating sugarcane. It's kind of like the integration segment of our market. This is new, and Hexis enhances it when you're talking about it relative to corn. So yeah, I mean, this is what's happening. And let's come back to the investors. If we want to say, look, in all fairness, right, you want to see credible, tangible results. Okay, we feel this partnership's credible and tangible. We feel the solution has been validated now by third parties as credible and tangible. If your attitude is show me the money, we accept that. It's coming. It's coming. Yeah, the gates to the thoroughbreds are open. It's running. Okay, we're coming. Right. But that's logical. If that's a logical notion. So if you want to see that de-risking step, just wait, it's coming. But the price will be different after you see it. So it's up to you. You get to
This
decide. You know, you get to decide. I'm not worried about it. If I could buy, I would be buying. We cannot buy. You can only imagine the amount of discussions internally we have and the information that I can't share, right? So we can't buy. It's killing me inside. It's killing me inside, right?
so your point about, what level of proof do you want? In when I look at investments, and I spend a long time on due diligence. I don't have a master's in chemistry or engineering, so there's holes in what I can do. But I will say that Marathon and these other big players, they they put the time in, and they're vetting things chemically. They're vetting the engineering processes, all of it. So when you see them put their money down on the table, put their facilities down, talking about offtake agreements, joint development, that is your clue as an investor to assess your level of risk, right? I mean, there's investors that are looking for, 100 bagger. There's investors that are out there and they're looking for 10x on their money. And there's investors out there that if they get a double, they're incredibly happy. And then there's people out there that are looking for 8 to 12% a year, right? So
Yeah.
you get to decide the whole way along what your risk level is and what level of returns you're willing to get. But when I see big players come into the picture, I see that de-risking and de-risking an investment. That's my point of view. I'm not an investment advisor. But I see what I see, and yesterday's news was huge. And when I saw the market not react, I thought, great, great for me.
Yeah.
So
It's
I'll take your money, suckers.
it's a
My
it's a good
opinion.
yeah, it's a good conversation. I think, let me refresh it too, because think about this, right? Obviously Renfuel is not Marathon Petroleum, okay? Renfuel is literally in our opinion, for what they've created, the leading lignocellulosic, science, the lignocellulosic esterification process in the world, the leading. And you could, for whatever reason, that they said, we want to ride we want to be the fair, accurate, and ethical way to say it is we want to be part of this bigger system. We see that this bigger system creates a bigger pie that we share a piece of. So if we can share a piece of a bigger pie, then it's better for us. Let's think of the big picture, look at it systemically. NREL, right, literally represents one of the leading renewable energy and lignocellulosic based renewable energy sciences in the world. In the world. When I say they picked us to be part of this system, I'm saying precisely, just like RenFuel, they're giving us the exclusivity to develop, commercialize, and deliver this to the world. You can judge Hexis and Wendy Owens any way that you want to, okay? But the right way to assess it is that they have come up with a solution, right? That is peerless as far as we're concerned in terms of everything that it can do. There are other solutions that are amazing, hybrid poplars, bamboos, they're amazing. And the people involved in those cultures and those propagations are the some of the best people we know in the world. But I'm sorry, if you benchmark it against the Xanograss almost wins every single time. It's just incredible. Okay. So exclusivity. Let's do this together. It's a very systemic notion. So look, it's a little analogical. Even what you said is a little analogical. Like if marathon is then there's something there. Okay. Well, we don't base our decisions on that. We've proven it inside. They've come in and revalidated what they needed to revalidate. They're assessing the people that they want to be associated with, you know, even to the point of trusting us to take over this facility. Now, someone says, oh, well, they're shutting it down anyway. That's bullshit. They had completed their development. The research and development was completed. They were commercially ready for their solution. You would be shocked, I can't say the names of who they have commercial agreements with. Okay, but to us it's analogous to RenFuel. They led in doing something. You can take a cellulosic sugar, I'm sorry, a sugar, not just a cellulosic one, any sugar, most sugar, and take it to an aromatic fuel. That's pretty awesome. Okay. By the way, we can't do that on our own. We take that sugar to cellulosic ethanol, and then you can take it to SAF, right? Ethanol to jet. We can do that. Okay. They go right to the fuel. They skip a step, a monster step, right? Uh,
Expensive stuff.
an expensive step, a CO2 emitting step. Okay, so that's freaking awesome. Okay, but like a LanzaJet or like a RenFuel or like they have one little piece of a global renewable fuel supply chain from farm to fuel. They have one piece. We never wanted to be one piece. We are the integrator of the entire solution. And people who are critical can't seem, in my mind, based on the questions they're asking me, to comprehend what we're actually doing. And it's frustrating for me because I'm failing at being more effective at communicating this. I sincerely feel that way. It has to be my failure. I don't look, I don't know how much we're worth today. Someone else is saying, well, we're 700 million in just one of our subsidiaries. I don't know how much we're worth today. Okay. But it can't be 60 million, right? I can sell our mining assets in a distressed manner for 60 million. Distressed.
Yeah.
So I'm doing something wrong. Now, that's part of this impetus of we're going to have two public companies. And one of them is going to have the Series A fully funded cash in the bank. And these investors are going to get more shares, the opposite of a reverse, if you want to think of it that way, right? It and in a funded blue chip partnered technology leading world commercializing new standard in oil. If you believe that's possible, you should be pulling your hair out to buy stock. If you believe it's fraudulent, if you believe it's bullshit, what the hell are you doing in the stock? Like, get out. Get out. I've been working for 38 years. I couldn't be prouder of the accomplishments that our teams have built from my first 10 years to my second 10 years to my last 5 years. However, I'm deeply disappointed at where our valuation sits and our inability to deliver a higher value sooner. That should not be confused with our inability to deliver this monster. It's coming. It is no doubt in my mind, it is coming, right? That doesn't mean I'm upset. I am upset because guess what? We do need to deploy capital. We did increase our authorized capital base to use some of that capital to change this industry in a mind-bending, valuable way. Okay. I'm not anyone who challenges our capital allocation and deployment, right? I'm happy to hear how you would do it better. I'm like happy to hear about it. And by the way, we make mistakes, but I'm happy to hear about how you would do it better. But the notion that deploying capital is um, you know, negligent, fraudulent, irresponsible. Like we just ignore that noise
It
because
is noise.
either there's absolutely no understanding to what capitalism is and what we're doing, or there's an ulterior motive, and you're going to lose. There's no way that if you're betting against the company or you're trying to undermine the company that you're going to win. There's none. You're going to lose. So I'm sorry I got a little passionate about it, but I couldn't be happier. Like people, I mean, I'm absolutely miserable about the share price, and I could not be happier about the progress that our teams have made. We're not, we're not, we're not a startup that's commercializing. That would be like a career checkbox for most people, right? We're transforming a global supply chain and setting a new standard in energy and creating an oil well that will never stop producing. I mean, I want this interview is going to age well. Like I can't wait for you to replay this someday in the future. I can't wait, right? Because I couldn't be more convicted.
That disconnect between price and value that you're talking about is my favorite thing. So I'm sorry. I know I've said this before, but you continue to de-risk a company. We see bigger players coming in. I see more opportunity. And when I see the price stagnant, I'm happy because when I recognize an opportunity and I've had more time than I expected in this price range. So, but the concept of dilution is just pain to a lot of investors. And when you start talking about Renfuel and NREL, everybody being a piece of this bigger puzzle and wanting in, and the amount of exclusivity that you have, it's there may be more shares available now, so somebody can feel like they've been diluted. But the reality is that this is a much bigger pie now. And these are the steps to make it a bigger pie. So you may own a smaller percentage, but you own a smaller percentage of something that can be massively bigger. You know, we're talking magnitudes, not. I think it just comes down to.
Exponential is the right word. It's exponentially bigger. The
Thank
cap
you.
the capital is being deployed, right? Even AST. I mean, if people read our disclosures, American Science and Technology was the foundation of this organosol, right? That's how we acquired the Wausau facility and that IP package. We're still paying for that. Okay, they like us, so they're flexible, timing wise. They're take shares. Okay, we have a Renfuel, right? We're investing in them to do what? I mean, their piece to the puzzle opened up immediate commercial solution. Once we could esterify the crude bioleum into bioleum oil that could blend 1-for-1 with vegetable oils, we could sell it right the next day, right? That's what got everybody interested. NREL is taking us to a whole nother future, trying to shatter the SAF blend wall. We don't need to shatter the SAF blend wall. We could be the leading producer of SAF today and blend it. But if we shatter the blend wall, shut everybody else down because the game's over. Okay. So you don't want us to invest those monies, or you just want us to make the money out of thin air. Okay, then we're talking about like fantasy. Like we don't have time to talk about fantasy. You want me to sell some assets? I'm trying. I'm trying as hard as I can to sell some assets. Okay. But you want me to just shut the company down and wait until those assets are sold? No, please. It's ridiculous. Every dollar, we make mistakes. We're not perfect, but these dollars are going to have ridiculous returns associated with them. Right? I didn't say they may. I said they're going to. That's when my lawyers all get all mental. Don't say will, say may, right? It's happening right now. It's happening like right now.
Okay. Well, can I take us back to Hexis for a second?
Absolutely.
And I just want to remind everybody that that is an exclusive agreement on fuels, right?
Exclusive. There was a couple of small like pre-existing
Ex-
transactions that we of course would honor, but other than that, it's all in. Like we're working together now as if we were one team. We're building the plan for the farm to integrate into Oklahoma. It's amazing, but remind everybody that soybeans, which lead the renewable fuel feedstock equation, does 2 barrels per acre per year from soil. Corn, which is, the standard for 16 billion of corn ethanol, 10 barrels per acre per year. If we did a long cycle with Hexis, harvesting each year, we're at 100 barrels per acre per year. This is the oil well that never stops producing, except it enriches the soil, except it drives your carbon score negative. So we're not talking about, oh yeah, corn ethanol is a 70, soybeans, put you in that 45 to 55 range. It's good. That's why people like soybeans, right? 50% reduction in carbon impact. Forget that bioleum and waste wood is 15. We're 85% reduction. Forget that, because Hexas takes us negative. Hexas takes us negative. How does it take you negative, Crowder? I don't understand. It's not waste wood, because you're pulling CO2 out of the sky with an incredible carbon flux. You're putting it in the soil and you're leaving it there. What do you mean you're leaving it there? I thought you harvest this thing like corn. No, we don't harvest it like corn. We cut it at the base and we leave the roots in the ground. That carbon stays in the soil. We use the rest of it to do what? Give us the highest freaking yields in the industry.
So for anybody who hasn't already started their research into Hexis, there's a couple of things that I think are definitely noteworthy. One, they were chosen by Shell's Game Changer program. I think this is back in 2023. Nobody vets like Shell. It is a long and painful process, and they make really solid picks.
I can attest that Shell's a pain in the ass, by the way. Keep going.
Yeah, yeah. And um, they this the xanograph, I think it grows like 20 or maybe it's 40 feet tall.
Yeah.
It's like
Monstrous.
this mixture of bamboo and corn, and it has everything that you need, but it is it is a grass. They continue to grow. You chop it, it continues to grow. Like you said, those roots stay in the ground. All of that CO2 that's been pulled in stays in the ground. So it actually is making the soil better. But this is an exclusive agreement. So let's say I have my own corn ethanol plant and I figure out a way to turn things over with my own tech. Who has the fuels rights again?
Hello.
Oh, okay.
So,
All right.
so you have a corn ethanol plant, okay? And you say, well, geez, I can get a more flexible, higher yielding feedstock at a lower cost. That would be a check right there. I mean, that would be to me green go decision. However, stop. Hold on. We actually get much higher revenue because of the feedstock. Check already. Oh, did we mention it's already been pathway approved? So Hexis is already pathway approved for US RINs and renewable fuel standard credits. Okay. Well, I mean, that's ridiculous. Now it's a must do. How can I do this yesterday? Oh, wait, we forgot to mention the waste biomass from the corn ethanol facility, which, by the way, just as a little plug, remember David Winsness started his career figuring a way to extract distillers corn oil from that waste. So he figured out a way in the corn industry to get 10%, 8 to 10% more revenue from that crap that no one was paying attention to. That 8 to 10% more revenue added billions to the corn ethanol industry's revenue and saved their ass like multiple times in down cycles, right? Made the difference in multiple times in down cycles to that industry. But what he did here was not a 10% increment. The lignin is 100%. It's a double. So now I forgot to mention that old corn ethanol facility that's now doing cellulosic ethanol more profitably can just double or triple their yields again and start producing Bioleum. And now you're doing a drop in fuel. Guess what? Revenues are higher. The one thing that also people don't appreciate, look at the volatility of corn prices. Just do one of your 20-year charts, have a whack at it. Wood looks like a straight line. It's unbelievable. So you further de-risk, you have lower costs, you have more stable cost, you have higher yields, you have higher revenues. Those are two different things. I know they both increase revenue, but they're two different things. They're additive. It's going to shake everything up, right? So Hexis is it's a miracle. Like it just sounds too good. Oh, someone said, well, what's the negative implication of Hexis? Well, it's a perennial. You only plant it once. Well, how's that a negative implication? Well, the farmers don't really have much to do once they plant it.
That's
So,
hard.
well, don't they
I
go out? Don't they need to go out and like do pesticides and treat? No, you don't need that. There's no pesticides. There's none of that crap with Hexis, right? It's revolutionary to the farm.
well, don't worry. I was just in New Zealand and I did plenty of scouting. There are lots of really big farms available. Just, feel
Small
like I
fraction,
say Seattle
small
has,
fraction of converting corn. If you took a quarter of the corn acres and you would change the world. You would change the country for sure. You would change the country.
yeah, absolutely.
That's what
All
we're
right.
fixing.
Let me try and I got a little excited there. So let's SBCC still in play?
Yeah, still in play. Obviously, they were looking at a $300 million, pre-revenue to invest directly into fuels. Part of that, part of our interest in that was the size of the number, right? 200 million would have given us the ability to build our first facility, and that was a need. When the 152 million of tax-free municipal bonds were allocated to us from Oklahoma, and I think it's important to inject that these tax-free municipal bonds are only qualifying for waste renew like solid waste disposal, solid waste renewal. So it's not like everyone in any business that wants to can access these bonds. You have to have a renewable model. But when those monies became open to us, allocated to us, then you say, look, we don't need 200 million of equity. So now you pivot to the Series A. We haven't set a number, but it's a fraction of 200, obviously, right? That's needed now, to get that first site up and running. and 700 million pre-money sounds a lot better to me than 300 million pre-money. So I don't know, everyone's upset. Maybe they're not upset. Maybe they just don't believe it's going to be true, which is fine. As we said earlier, just stay tuned. Just
I
stay tuned.
appreciate I appreciate you shopping for better deals for shareholders.
Yeah. Now, but they're still in play because they still love the metals business,
Yeah.
and what starts to form if you split and have an Oklahoma-based, public fuel company and a Nevada-based metals and mining company, there's still a lot of interest here. So they're very excited about us, they're very excited about what we're doing, but so are many others. So that's what I said earlier. Like we have a lot of capital pooling and we're engaged with it. It's frankly to the point where, we're spending most of our time with it, and we want to make sure we're not slowing down the business progressions, at the same time. So it's a good thing, right? Our capacity is fully utilized. We're fully engaged, but it's moving.
Well, you just walked into my next question. Are we able to talk with any certainty about spinoffs at this point?
Yeah, I think that the certainty is we're going to do it. Okay, so the certainty is we're going to do it, and we really think that the Series A is prerequisite, right? It is very important that Fuels is capitalized. We're not looking to do some kind of gimmicky thing here, right? We want a well-funded, well-partnered, well-progressing company that qualifies, in our opinion, to be public. I mean, some could argue why go public, just wait, right? But we're gonna unlock this value. We're going to unlock this value come hell or high water. Okay, so that's the plan. The precise methods of how to do it, we're now getting very well educated on. We obviously had knowledge before. We didn't do it like blindly or blissfully, but now we're getting the devils into the details, right? And our goal is to maximize value for all of our existing shareholders, right? Those who are holding shares are going to benefit.
That's clear. All right.
Yeah.
There was a filing on SSOF on like the end of January. Any information there?
Yeah, I think, so SSOF always, has always had a capital raising target, and we're required to file anytime a new investor comes in. That's like a blue sky filing. Like every state that we have an investor participate in, we have to file, and be on record for that. I think that filing had listed the amount of capital that we had raised to date, and some people might have misinterpreted that as that was the capital raise that was occurring right at that moment. That's not true. It was just some incremental great investors, right? A couple of great investors, two from Texas, one from California, invested. So it's very active in terms of, raising money. We're starting to get serious, contemplations about major investments into Sierra Springs, that opportunity fund company, as well as potentially acquisition, of that company. But it's a big asset and real estate position. There are complexities, there's infrastructural things and questions. So the diligence on those things just takes a while. But the message to take is it's active. It's not dormant. I mean, it's active. And then the two Comstock properties that are adjacent to that entire portfolio, right, benefit with that movement. To what end? Ultimately, we're trying to sell them. So it's a good indicator that there's activity going on, that there's a lot of interest, but we don't have anything definitive yet ready to announce.
Okay. And if I can jump back to Marathon Petroleum, and do the bonds on the Oklahoma site, they don't count at all towards that 25 million
No,
that
that's
needs to be raised.
great question. Okay, so think of it in this way. The Series A would be the first third-party capital raise into Comstock Fuels Corporation. That is it's the 100% owned subsidiary of Comstock Inc. Ultimately, we will set up a special purpose entity in Oklahoma to build the first refinery. We've said that that's approximately $200 million. At that entity level, we will raise 150 plus million of bonds, and we will also have to bring in some project equity at that level. Now, what's amazing about those structures is you have some really, really incredible tax benefits. So this term tax equities starts to form. People, we've talked to investors that, are you interested in a Series A? No, but if you got any tax equity investments, please give us a call. Because they tend to be shorter duration, like maybe, like 7-year project, accelerated depreciation, and you could structure those equities in a remarkable win-win, remarkable. Whereas the investor who needs tax deductions can benefit from investing in these sort of tax benefiting equities. But then once those periods have elapsed and they've received the tremendous amount of benefit from it, then the equity could even flip, so back, right? So it's almost like a safer, guaranteed tax benefited return, but then in the long-term equity part of the equation, the company retains the most. So I would say the most important point about your question is don't confuse the Series A with the capital needed to build the first facility. And that people might take that poorly or positively, take it any way you want, right? When somebody's putting a $700+ million value on your company before you go out and raise bonds and other types of capital to actually build that first facility, it's a monstrous home run. It's a grand slam.
All right. Well, that brings me to my last question, which is, can I have an update on metals?
Yes, I mean, I actually got a few questions over the weekend. Today's just Saturday, so just this morning, asking about metals. Hey, we love the updates on fuels. Thank you for the progress on fuels, but we haven't heard anything on metals, and that's fair. Part of it is that we've just been having so much work on fuels, but remember, those teams are separate and fully dedicated. So there's no scenario where we're pausing anything on metals to do fuels. That doesn't exist in the way that we're structured. The metals team is fully dedicated. And so since the end of last year, when they filed their permit for the industry scale approval, at 600 Lake Avenue in Silver Springs, they basically had two major objectives. One is go out and get the market. You now have an operating facility, which is running 3 shifts at small scale. You have storage all over,
Lots.
lots, and then you've submitted the permits for the facility waiting for that industry scale. Go out and get the business. And there's been remarkable progress there. We're targeting small, we're targeting medium, and we're targeting the whales, like the majors, the marathons and the like of solar energy and utility businesses. That's what the level that we're at. It's funny, there's so many parallels on how the two are progressing. So, we've even gotten some tentative approvals, just to give some color for those people to say, we're going to give you our business. They need to come out and audit the facility. They need to come and audit the offtake. Are you truly a zero landfill solution? Are all these materials going into productive uses? Are you legally terminating our liabilities, or are you able to legally terminate our liabilities by taking these materials and processing them? All that work has gone tremendously, tremendously. I mean, there's even some positive surprises that are happening because of this. Okay. So, and then we've gotten conditional nods like, yeah, your guys are it. And we've even gotten some market intelligence like these other companies, they're not able to scale. These other companies are not truly zero landfill. Like they're sending some of the residuals to landfills, and that's not okay for us. That's what we're hearing from the market. And we've also gotten some tentatives that say, once we finalize, we're okay with you announcing and letting people know who we are. We're a little sensitive on that though, right? We don't want to provide a roadmap for our competition, right? To see where we're going. So we want to make sure it's final, done, locked in, before we're able to acknowledge it. So, we had hundreds of thousands of revenue in 2024. We're going to have millions of revenue in 2025, and that's still all small scale. And then hopefully by the end of 2025, we'll have our permits. We will need to start ordering the equipments associated with those permits, in a couple months,
All the
because
long lead.
the long lead, try to synchronize everything coming together in the fourth quarter, get it up and running in early 2026. Now you're prime time. You're in the big leagues. That facility, so in that way, Metals is a step ahead, right? Because Fuel Oklahoma to Fuels is like the existing facility that's currently operating in Metals. Different scale, obviously, in terms of dollars, but in terms of maturity of TRL7 going to TRL8, it's a step ahead. We've already have that thing running. In other words, if Madison was doing 2 barrels a day, that would be equivalent to what we're doing right now in Silver Springs with the panels per day, 2 tons a day, 4 tons a day, 5 tons a day. But they're going to be ready to go to industry scale in 2026. And that model is incredible. That's where that throughput just starts flowing, and it flows, to say it flows immediately might be too aggressive, but I'm not sure, because remember, we get paid up front, right, to take those panels, right? So if you're simple in your mindset of cash flow, you're cash positive as soon as you start receiving panels.
All right. I I'm excited. Metals is completely fascinating, but it's definitely not the moving parts right in front of our faces right
I
now.
know, and
So
to these questions, it gets shadowed out, right? It gets overseen a little bit. Another justification for splitting the two, right? They all deserve their own stage, and they all deserve to be in prime time because they're leading in their industry. They are leading in their industry in both cases.
yeah, from a communication standpoint, right? I really want to be able to talk about both companies as distinct and separate companies because
Yeah,
while the Venn diagram of investors for both, I think will have huge overlap.
yeah,
It's
yeah.
still distinct enough that,
Yeah.
it's different messages. And I think you'd end up with a broader audience for both
You will.
as soon as they're separated.
You'll have a broader audience for both. You'll have a good overlap, but then you'll start to grow those fuels dedicated investors. You start to grow those metal dedicated investors. To the extent they're being held back for some reason, we'll unblock that too. So the spin it is not a gimmick, right? It is not a gimmick. It is about full forceful dedication, full forceful communication, more effective, clearer, and then aligning with the investment thesis. So it's right to say, this is where 1 + 1 = 4 in my mind. It's right to say, right, that there are people, you just said it, that will love both. Okay. But it's also right to say that there will people who really only want to focus on metals and mining. And those people might be blocked right now in their minds, right? There's people who absolutely only want to be in fuels and that kind of energy solution. And those people might be blocked, right? We know it, right? Because the people that are investing in the Series A won't invest in ink. They won't do it, right? So we're unblocking something in a substantive way. It's going to take a few steps. One, get the Series A done. B, affect the spin. 3, market and recruit and target institutional and retail and high net worth investors that will be clearer as to what, and then by definition will be further along and more mature. I love what you said earlier. There are investors who love early stage and want the moonshot. There are investors who want to see a certain amount of de-risking. Don't talk to me until TRL7 facility has been operating for at least 6 months. There's investors who are like, I don't even want to invest until there's cash flows or at least a predictable proximity to cash flows. And then there's investors who say, I'm not going to invest unless you pay. Well, we may never get that far, but we might. I think we will, but someday it's far away. Don't ask me about that now. Okay. So, but the point is they're happier to pay more, very, very happy to pay more in a different risk profile.
I
So
like the whole ride.
I like the whole
That's
ride too.
that's me. So, so all right. Well, thank you for taking the time today to cover all of this. And also thank you for all the effort that I know you've been working tirelessly. And I appreciate it on behalf of your shareholders. Thanks.
No, my pleasure, and always look forward to these conversations. Thanks, Penny.
All right. Have a great weekend.